The next section is to assess your total assets. And I break assets into two categories: liquid assets and tangible assets. Liquid assets are cash or the equivalent. So checking accounts, savings accounts, cash in a safety deposit box, cash in your mattress, whatever cash you have, that would be considered a liquid asset. And within that, I have this subcategory called near liquid assets, where you might have something in a stock or a bond where it's not actually cash, but you pay a $5 online brokerage fee and they transfer the money into your account in a couple of days. A stock, an investment that you can cash out quickly, is essentially a near liquid asset. So I treat it as a liquid asset. The other category of tangible assets would include things that cannot be easily or quickly converted into cash. So your home is an asset, but can't be converted quickly and easily into cash. Collections of jewelry or stamps or artwork or grandma's wedding china, whatever it is that you have to go through the process of selling, would be listed as an asset at the best equivalent of market value that you can come up with, but as a tangible asset, not as a liquid asset, because it can't easily be converted into cash. You'll see as we move forward in my settlement target spreadsheet that I also include columns for the market value of a tangible asset and the actual cash value, which is often different. For instance, if you are to sell your home or a car or a collection, there may be expenses associated with commissions and taxes and other things that subtract from the full market value to come up with the cash value. So if you're not going to do a spreadsheet that includes all those columns, when you enter the final line item, enter it as the cash value, not the market value. If you're estimating how much you can sell some artwork for, estimate it after any commissions or fees you would have to pay in the sale. Similarly, if you have money in a certificate of deposit or an IRA, and there are penalties associated with making an early withdrawal, you'll want to subtract those penalties from the market value to come up with the cash value. I would consider something like an IRA a near liquid asset. It's easy to get the money out, but you have to account for you're not going to get the full value. Also, I'm not recommending that you turn any of these things into cash yet. Certainly not. Don't go start selling off your assets. Even if you hear me saying, oh, your IRA, and you have this reflexive reaction of, I'm not cashing out my IRA. I'm not suggesting you cash out your IRA. We're going to get into the strategy video in a moment where we talk in more detail about when it is right and when it is not necessarily the right thing to do to turn any particular asset into cash. I'm only saying for now, we want to have a full assessment, a full accounting of all of it. So you're able to look at it in one place and make by the numbers business choices about what you're going to allocate to your settlement fund. If you haven't written it down and it's not included in the equation at all, you may be missing some areas that could be beneficial to you. So write it all down. Every asset that you have, even if it's furniture in the house, antiques sitting in the garage that you haven't looked at for a while, everything you can think of, cash, stocks, bonds, bank accounts, IRAs, retirement accounts, real property, automobiles, vehicles, everything you can think of that's going to have a significant value. Write it down, get a full sense of your assets.